Welcome back. I have some big news to share with you guys because average 30-year fixed rate mortgage rates just increased to nearly a 23-year high. And on top of that, home buying demand is nearly at a 28-year low. I have a lot to share in today's video, so let's go ahead and dive right in. So first I want to share average rates according to Investopedia.com as of today, which is August 16th here. They reported here that average rates, it's just laughable because it's so high. Average rates at 7.67%, absolutely insane. Also, according to the Mortgage News Daily as of today, the average rate is 7.34%, excluding one single day in late October last year. This is the highest rates we have going back to December of 2000. Also, every single one of these metrics here, besides 15 here, is over 7%. And also FHA and VA is around 7 to 7.04%. So when looking at rates today at 7.34%, rates 1 year ago were at 5.29%. That's an increase of 2 percentage points over the last 12 months. And looking at this chart right here, the average rates today are the highest rates going back to late October of 2022. But before that, look at this. The max, according to the Mortgage News Daily, they have daily rates going back to April 2009. Obviously, rates are much higher than then. So instead, I want to show you guys average rates according to Freddie Mac, because when looking at rates at 7.34%, these are the highest levels we've had going back to December of 2000. Back then, the average rate was at 7.38%. So I want to share an example regarding how is that impacting current home buyers right now due to this volatility in rates we've been seeing for quite some time here. So if someone looking to buy a $400,000 home, putting 5% down, your rate 1 year ago was at 5.29%. I'm excluding home insurance, taxes, and HOA because that varies by the area and of course the neighborhood as well. So only looking at principal and interest, your housing payment based on that scenario would be $2,107 per month. However, looking at today's rates at 7.34%, your new housing payment would be $2,615 per month. That's a giant increase of $508 more per month to buy at that same $400,000 home today compared to 12 months ago. But wait, there's more, because rates have increased by about 2 percentage points, or about 2% from 12 months ago. That actually causes buyers' purchasing power to decrease by 20% as well. But it actually gets worse here, because look at the total interest paid over the life of the loan, over the life of the 30-year fixed rate loan. Looking at rates at 5.29% 1 year ago, the total interest paid over the life of that 30-year fixed rate loan is just under $380,000. When accounting for today's rates, though, you would pay a whopping $562,000 in interest paid. In other words, you would pay approximately $183,000 more in interest paid over the life of that 30-year fixed rate loan. So because average rates are nearly at a 23-year high besides one single day, this is going to cause our housing market to look a lot interesting in the weeks and months ahead if we sustain these very high levels of mortgage rates. So according to the Mortgage Bankers Association as of today, they actually look at weekly applications for people looking to buy houses and also for people looking to refi their mortgages as well. So looking at total applications, that decreased by 0.8% from 1 week ago. But the refi index decreased by 2%, and also it fell by 35% from the same week 1 year ago. Of course, it makes sense given the fact that rates increased so much compared to 12 months ago, that obviously fewer people are doing refis. What I'm more interested in, I report this to you guys every week here, is our seasonally adjusted purchase index, which is an index which measures the total number of houses, or not total number of applications to buy houses. So their index decreased by 0.2% and was down by 26% from the same time frame 1 year ago. Also, as a note right here, besides the end of February of 2023, their purchase index is now at the lowest levels since early May of 1995. So nearly a 28-year low in the total number of applications to buy houses. On top of that, their purchase index has now decreased for 5 consecutive weeks as well. So how insane is that? We have average mortgage rates at the highest levels since approximately December of 2000, excluding one single day in October. And on top of that, the amount of people submitting loan applications to buy houses is at the lowest levels since early May of 1995, excluding the end of February of 2023. Additionally, according to Joel Kahn, who's the MBA's vice president and deputy chief economist, he stated the following: the 30-year fixed rate mortgage rate increased for the third consecutive week, reaching 7.16%, matching October 2022's rate and the highest rate since the year of 2001. The MBA, just like Freddie Mac, look at average rates on a weekly basis, which of course, according to the Mortgage News Daily, they of course look at daily rates. So according to their weekly rate, the average rate increased to the highest level since 2001. So one thing I do want to mention in today's video is that obviously we have a lot of challenges right now in the housing market, to say the least, but builders right now are kind of taking advantage of the situation regarding high rates and of course low existing housing inventory, or in other words, a lack of houses for sale for existing houses. So because of this, applications for home loans to buy brand new home construction surged by 35.5% this July, according to the MBA. It says here applications for purchase loans on newly constructed houses remain strong in July, up by about 36% annually, as new homes continue to account for a growing share of homes available for sale. Now, what's wild about this is that even though applications surged by nearly 36% from 12 months ago, they are still predicting that new home sales for July are going to decrease by 1.5% from this June. Therefore, the MBA is predicting that on a seasonally adjusted annualized basis, there's going to be 677,000 brand new home sales, which, by the way, the U.S. Census Bureau defines a new home sale as a contract being signed between a builder and a home buyer. So their estimate is at 677,000. That's down from 687,000 this June. Now, here's something that's also kind of a turn of events here as well, because here's a weekly survey I mention on the channel every single month, of course, but based on the this is a survey here for August. This is from the National Association of Home Builders. It says here, after steadily rising for 7 consecutive months, builder confidence for building new single-family houses in August actually decreased because of rising mortgage rates, and of course because of inflation and a lack of housing affordability. So therefore, this means that builder confidence was increasing from January through July this year, but this August they actually decreased because rates are increasing at levels that they potentially believe is actually going to be hurting home sales in the near term here. So based on the survey for August from the National Association of Home Builders, it says this revealed that rising mortgage rates are causing more builders to use sales incentives to attract home buyers. I've been talking about this on channel for quite some time because builders are offering lower mortgage rates in order to increase home sales and offering other incentives to home buyers as well. It says after dropping steadily for 4 months from 31% in March to 22% in July, the share of builders cutting prices to increase sales rose again to 25% in August. Also, the share of builders using incentives in order to drive home sales was at 55% in August, higher than July at 52%, but still lower than in December 2022, when at that time it was at 62% of builders offering incentives to home buyers. So to summarize today's video, this is just absolutely insane. Big news I want to share with you guys because home buying demand is dropping to very low levels because average mortgage rates are actually surging to the highest levels we've seen in about, 23 years. So if that sustains, our housing market's actually going to look a lot uglier here in the weeks and months ahead. And of course, I'll definitely keep you posted with latest developments. If you guys haven't subscribed just yet, I invite you to do so. Also, check out that link below if you guys want a real estate agent referral. Hope you guys have an awesome day. Look forward to seeing you on the next video.